Corporation tax rates, 20%. Very straightforward. Will they stay like that? We have the lowest mainstream corporation tax rate in the G7, in the Western world. The rate in the US, for example, is 40%. So it sort of just shows you where we are. Of course, when you add personal tax to it, of course, it becomes slightly different. But we have the lowest rate of large industrial countries, and that's how the rates have moved. They've come down from 28%, where we simply weren't competitive, to where we are today. So a fair change over that period. Capital allowances, no real change. What the Chancellor did do, we know we have this annual investment allowance, so this is £500,000. It went up, I guess, about 15 months ago to this level. In fact, exactly 15 months ago to this level. What the Chancellor announced is that it will not go down, assuming that he's in government, of course, back to £25,000 on the 1st of January 16, which is what it would have done, because the £500,000 is a temporary increase in the limit. It was due to go back to 25. He said it won't go down to that level, but he doesn't know what level it will go down to. So clearly, if you're thinking about capital investment, you need to think very carefully about the timing of it, because one ought to at least think about using up the band. If you're going to be over it, you need to think about the timing of your investment and think very carefully about it. You need to be careful with year ends and all those kind of nice things. I have no doubt at all, if there is a change of government, there will be a budget in July, if not June. Well, probably June, because of course it's holiday time, isn't it, in July? They will be off on some holidays. So probably in June there'll be a budget. We may or may not decide to reconvene and give you another breakfast. That's not exactly budgeting, is it? Especially when we have to import special jam for Peter. I've no doubt there will be another budget if there is a change in government. But anyway, small change to R&D credits for those of you, the increasing number of people that claim them. They are actually much easier than they used to be to claim. I don't know why. I think it's because the government wants you to have them, I think is the basic idea. Perhaps there is some kind of statistic that they are happy to play on with their tax credits to say we are the sort of country that invests in this kind of thing, and that's all very good. A slight increase in the rate for small and medium enterprises. But there is also what they call the Advanced Assurance Scheme going to be introduced. Now, because it is now so easy to get it, I'm not really quite sure why you need it. I don't think anyone would probably, unless we're talking about absolutely vast fortunes being involved, decide whether or not to embark on a R&D project because they're going to get tax credits. They embark on R&D because they think it's going to be good for their business and they need to do it, not because they're going to get a tax credit. A tax credit's a bonus. But there's all kinds of things you can get R&D for, and it's worth just having a think about whether some of the things that you do, which may be just ordinary everyday things to you, but which are trying to develop new products, could be R&D, because you can get, as I say, increased tax relief for it, so it's worth the real money. Multinational enterprises, the so-called diverted profit tax. Going to be very interesting to see how this works in practice, because it's obviously what it's aimed at is clear to see. It's obviously aimed at companies that do vast amounts of turnover in the UK but pay very, very little profits tax for one reason or another. Now, historically, of course, that's probably for very legitimate reasons, because they've got very expensive and worthwhile brands that they're paying vast royalties on to Liechtenstein or Switzerland or somewhere else where these brands are properly owned from. But of course, that's, to be honest, the government could have always tackled that. They didn't need a profits tax to do that. They could have looked at the rate at which those royalties are being paid and say that's too much, and just say you can't pay that much. So why they quite need to do this, I don't know. But for aggressive tax planning, apparently, whatever that means, and I don't know what it means, because to be honest, what most of these corporations are doing, I would have said, is just normal stuff for business. There's going to be a 25% rate, so it's more expensive than corporation tax, which seems odd to me. I would have said corporation tax and bung a penalty on it, fine, but to have a different rate seems odd. So how much tax they're going to collect from this, dubious, I would say. I think some companies have already changed their practice anyway to pay what they think is a reasonable amount of tax. So there's going to be big arguments over this. And of course, it could be anti-European. I can see an argument here about being a breach of human rights, breach of free movement of capital, all kinds of things coming up. So it's going to be very interesting to see how that actually applies in practice. But it's good political stuff, isn't it?